crude continuing its climb today, notching its highest close since 2018. And your next guest says oil could keep pumping even higher. Let's bring in Rob Schloimer of RBC Wealth Management to chart it out. Hi, Rob.
Hi, thanks for having me on. So look, oil's had a pretty big move here. I think if we look at the very long-term chart, it's always important to get that longer-term perspective. That move above 66, 67 was fairly significant from a technical standpoint. It reversed the downtrend that was in place from 2009 through to 2021, and obviously through those levels that we hadn't seen since 2018 and 19. So fairly significant moves to make a higher high. So where does it go from here? Well, on a technical basis, your next key level takes you to those 2018 highs around that $77 level, and that's roughly a 50% retracement of that entire move from 150 down to, well, let's just call it zero for now. And then the next level from there is probably closer to 90 bucks. So I still think there's more upside here. I expect to see oil pause and consolidate around that $77 level. But the rest of the energy space has a lot going on in it as well. For example, if we look at the natural gas chart, pretty significant move there today as well. And that's been in a range since the fourth quarter of 2020, around that 340 level. So I think if you get a move above 340, you've got more upside towards that $4 level. And that I think will continue to activate the entire energy space. So, what do you do about this? It's a small sector. It's got a lot of pressure from ESG. It's not that significant in the benchmarks. A lot of institutional managers don't really need to own it, but it can add a lot of alpha to the portfolio. And I think for generalists, we've got to look at some of the ETFs. And I would start with the XOP E&P ETF. And what's interesting here is it is now bumping up against its next resistance level around the fourth quarter of the 2020 highs, the 2020 highs. The first quarter of 2020 highs. And the next level from there is about 125, roughly taking you into the 2018 highs. So those are some pretty significant levels from here. The trend is still positive, but what's significant is if you look in the bottom panel of that XOP chart, and that's the E&P ETF relative to energy. And that's where the leadership is. And it's an unusual cycle to see those E&P stocks leading the sector, say, versus the oil service names, which would be the next chart. And there's still more upside in the oil service ETF as well. I think that OIH can move towards that 272 level and ultimately towards 370. But I would point out on the bottom panel, it's not showing the same type of leadership that we've seen in other cycles. In other words, generally we see the oil service lead. It's not doing so this sector, at least not as much as the E&P names are. So I continue to focus, or at least overweight, for energy exposure in the E&P area.
Rob, you broke that down really well. Crude, more than almost any other commodities, one that overshoots to the downside. My sense is we're about to get to the overshoot to the upside. Is that what you're looking at as well? A lot of people now talking about $100 crude.
It's not that unreasonable. I mean, oil tends to be, or energy tends to be, one of the last sectors to move in a general market cycle. So lots of concerns about inflation. Remember, oil was at 150. We had no inflation in the market. To me, oil can get towards that $91 level. It's not unreasonable to think it can get to 100, 110 as well. But let's take it one step at a time, one technical level. 77 is the first level, 91 is the next level.
Rob, thank you so much for charting that out and going through all of that. I would have been shocked if someone would have told me that oil would be at almost $74 a year ago today, considering how far it's come. I don't think 90 is out of the question either. Thank you very much. All right, let's trade this. Dan Nathan, what do you make of the energy sector? Why do you look so surprised?
Well, listen, he did a great job on that. I just say that it seems like one of the more crowded trades within the energy and material spaces, and I get the reasons why. But let me just tell you this. The dollar started going higher a little bit here, Guy. I know that you were thinking that we're going to make some lower lows. Dollar goes too much higher here. I don't know where oil's going. And then I look at the large integrated names. I know this is definitely in Tim's in his wheelhouse here, but I look at Exxon. It broke down at 65 bucks. That was the low back in 2018, and then it broke down in early 2020. It went to about 30. Now it's back here at 64 and a half. That looks like a massive technical resistance level here. I want to lean against that. I want to take the other side of this oil trade.
Big cap integrated names, I understand, but Tim, who's been on this now for a while, Courtney, and correct. You know, the oil service names. And Schlumberger, I think, got initiated at Goldman Sachs middle of May around $38 price target. And I'll stay with it. I think it goes there. I think they initiated Baker Hughes as well with a buy. Those names work. And some of these levered names like Phillips 66, which I think closed around 88 today. I think that goes to $100 into earnings, which still would be a reasonable valuation. So I do think oil overshoots to the upside. The tailwind, it had been a weaker dollar. Dan is right. It will be a bit of a headwind, but not enough to keep it from going there, in my opinion.
Tim, forgive me. It seems like you are the expert of all experts, and I should have gone to you first. Get in on this trade.
No, it's okay. Look, I'll be a broken record on this. The major thing that investors should be focused on is that these companies are run differently than they were 5 years ago, let alone 10 years ago. So I think and it's clear to me that if you look at the price of oil relative and the ratio of the OIH or the XOP or even the XLE to the price of crude, they're absolutely underperforming. There's no sense of conviction that these companies are not going to destroy more capital. They're not. The best thing that ever happened to the oil sector is the EV trade. I'm telling you, the fact of the matter is that the Biden energy policy is very bullish for investing in the energy sector, and we're seeing that. But look at and graph where the OIH is relative to the oil price, especially relative to pre-COVID, especially to 2 years ago. You can't tell me these aren't better run companies, more efficient, more technology, and have adapted to the current status quo in terms of energy policy. So I think there's more to go.
Shepard Smith here. Thanks for watching CNBC on YouTube.